So far, we focused on some of the methods I use to pick stocks. Now I want to teach you about a way to trade them. This is a discipline that's incredibly useful, especially in volatile, crazy markets. And it's called, write this down, okay, because this is the one I'm asked about the most when on the street, trading around a core position. Trading around a core position. I know that the rap on me, at least among my critics, is that I'm all about trading. That's all I do. That I don't have advice for regular investors. That it's all short term. That's completely bogus. Totally untrue. This show is mostly about long-term investing. It's actually how to use the trading of other guys to make good long-term investments. However, to put aside whatever little humility I really have left at this point, I will admit that I was and remain a pretty good trader. Although, of course, now I can only trade for the charitable trust, ActionAlertsPlus.com, and I have to tell you what I'm going to do ahead of time. That's the deal with that product. And more important, if you want to be a good investor, it pays to put trading disciplines into practice, even if you're an investor. That way you can buy more shares of the stock you like at lower prices and sell more shares when they're flying high unnaturally. Trading is about profiting from short-term fluctuations in the stock price. Now, sometimes these moves are caused by a catalyst, but sometimes they're just a result of a topsy-turvy market that takes stocks too high on a whim. Knowing how to trade makes you a better investor. I'm going to emphasize that. Trading around a core position is one of the most basic and useful disciplines out there. So what's it mean to trade around a core? Let's go through it step by step. First, you need a stock. Let's pick one that you like, one you got an opinion on, one where you have a bias in favor of. Find a stock you believe will be going higher over the long term. What you're really looking for here is a great company with a stock that could get tossed around by market volatility, but that you believe will go higher if you're patient. If you were just investing, then you'd set up a position in the stock, buying in increments, because we all know that buying all at once is the sin of arrogance. Let's pick Amazon, okay? That's always stock that people like, right? Amazon.com. If you want to own 300 shares of Amazon, then the way to set up that position would be to buy 100 shares 3 times over a period of weeks or even months. And that would be your core position as an investor. But let's say you want to trade. I know many of you want to, but you feel discouraged because you remember how all the amateur day traders got blown out when that tech bubble burst. Remember those day guys? The key word here was amateur. You home gamers can make money trading if you do it right, like a professional. In the old days, when commissions were higher, that wasn't true. The commissions would eat into your profits, and it just wasn't worthwhile to trade. I would even discourage it, and I like the idea of trading around a core. That's not been the case for ages and ages. So let's come back to the core position issue. We own 300 shares of Amazon in this example. Let's say it's trading $100 a share. Every time the stock jumps 3 points, so 3%, maybe you sell 50 shares. You shave a little off to bring in some profits. So once Amazon reaches 109, you would own 150 shares. Then you wait until something happens to knock the stock down, as long as it doesn't damage the company's prospects. That shouldn't take long, given that we're in a world where stocks get crushed by all kinds of factors that have nothing to do with the fundamentals of Amazon or anything else. As the stock comes down, you buy it back in increments. Remember, this is what's called trading around a core. Since we started with 300 shares, let's keep using increments of 50 to buy it back. So if Amazon goes back to 103, you buy 50 shares, then another 50 at 100, and so on. Okay, now this might appear to be small potatoes. Up 3%, sell 50, down 3%, buy 50, up 3%, sell them again. But over time, your profits add up. And that's what trading around a core position is all about. A lot of people think that trading is incredibly exciting, and it can be. But if you're good at trading around a core position, you should be pretty bored. All you're doing is watching the stock move and trimming or adding to your position accordingly. Contra the image of trading as something that's reckless and irresponsible, trading around a core position is really the height of prudent portfolio adjustment. We do have some rules to follow. In my example, we started with a core position of 300 shares of $100 stock, Amazon. If I were trading around that as my core position, I wouldn't want to own more than 300 shares or less than 100. Obviously, you can scale these numbers depending on how big your position is, but the basic idea is to avoid putting yourself in a spot where you have too much on the table in case the stock gets swatted down, or too little on the table to take advantage of any upside that comes your way. Trading around a core position is an important basic trading strategy that everyone can use, even those of you who find the notion of trading, as opposed to investing, to be abhorrent.